ETF. Warren, great to talk to you. I mean, we got this uptick in new home sales today. And on the same day, of course, we got that dovish message from Powell, huge rally in the Treasury market, mortgage rates coming down, and essentially reinforcing confidence in a soft landing scenario. So how does it all fit together, and what role do you think housing has in whether, in fact, we can still sort of be resilient in this economy?
Yeah, I think housing, thank you for having me. I think housing is everything, honestly. It's, there's an old paper, Housing is the Economy, and it kind of oversimplifies everything, but to a certain extent, there's a lot of truth in that. And at 314, that's how we look at the world. We have a framework for determining whether the economy is heading into a recession, and we focus on residential construction jobs. And so because of that focus, we really model everything out in the housing industry. And, today's data was definitely a good sign. I mean, there's been weakness. It's something we've been concerned about since mid-year. We're still on the soft landing train, I should say, or the bandwagon. But it's nice to see some reactivity to these lower rates. And I think that's what you're going to need to have to keep the housing market moving.
Yeah, I mean, obviously, it's been a little bit slippery in terms of that relationship, right? I mean, you didn't see an immediate burst of demand. You're seeing existing inventories come back online to a fair degree and not immediately being kind of soaked up. So more broadly, how much more confidence did you have after today's message from Powell and the market action, or just were you always in this camp that says, listen, the volatility is noise and we're going to be okay?
Yeah, no, I think that... Look, to me, there's a lot to get kind of ostensibly worried about in the market. And you'll hear a lot about these things, I think, over the next 3 months. And there's validity to them. So things like seasonality. September is a notoriously weak period for the market. You have NVIDIA earnings next week. Who knows how that's going to break? And obviously the election, which is the huge wild card that nobody knows how to discount. And so in a lot of ways, it can feel kind of scary out there. But the bottom line is, I think since mid-year, this market equation has gotten a lot easier to solve. So the bottom line is inflation is no longer, at least for right now, a concern in the market. And Powell confirmed that today. He talked about inflation in the past tense, which to me, it's a huge change. And it tells me that no matter what, if you're at home thinking about this and you don't think inflation is dead, it doesn't matter. What the Fed, the guy controlling the Fed, thinks inflation is behind us. And that's has huge implications for policy. So with inflation dead, all we have to worry about is growth going forward. So it goes back to your housing question, goes back to, is the consumer responding to lower rates and things like that? But the equation is simplified. So growth is everything at this point in time, has major implications for how you create your portfolio and what we're paying attention to going forward. And ultimately, I think those things that are really headline grabbing risks, distraction, ultimately, if we avoid a recession, the market's going to go higher going into next year.
Yeah, exactly. I mean, all those lines about how, well, it's always been smart to sell the first Fed rate cut. I mean, that really was only because Fed rate cuts often led to recessions, and the couple times it didn't happen, that was a bad play. But I guess within the market, what makes most sense here? I mentioned earlier that, today they sort of just enacted the old playbook, Russell flying, unprofitable tech up 4% or so on the day, banks moving. Does that sort of make sense, or is there another place to do it?
I'm going to run and go get us.
Yeah, for me, our fund and our model, we invest in high quality companies. And I think this is the right part of the cycle for that. I know that if we thread the perfect needle on a soft landing, then the small caps make some sense, I think. But notoriously, this is a bad time in the cycle to be levered up on small caps. So I've been shying away from that space all year, and that's just where I am philosophically, where we are in the cycle.
All we can do is lead the
Mag 7, on the other hand, is a little bit crowded. I think everybody feels that way. And so if you're going to beat the quote-unquote benchmark here, I think you're going to need to find high-quality stocks that you feel confident holding through some of this volatility that we're talking about. And so that's what we're doing. A lot of that means no small caps, reduced weight in Mag 7, less cyclical exposure.
This stuff here. And we're back with another episode of Key Factors Podcast Real Estate AF, where the AF stands for and finance. And we're going to be talking about both today, real estate and finance. And we're going to be talking about it from a bigger standpoint of home affordability and what the current administration, future administration, and the potential administration are actually going to be providing us business in the business industry folks as well as home buyers out there. So I brought along a very famous guest that continues to provide us with outstanding sports picks, Mr. John Hudson. How you doing?
I'm doing great, man. Mark, thanks for having me back. As always, I've got some great hot sports opinions here to share with the world.
And we're looking forward to hearing them. So my next guest, Brianna Jones, how you doing?
I'm good. How are you?
Doing very well. Thanks for reaching out and deciding to join on this. So without going further, I definitely want to give you an opportunity to tell the audience who you are, kind of how you got into the business, all that good stuff, so that they can understand why they should be listening to your gospel.
Right.
Go for it.
Well,
Pull that mic closer to you.
I have kind of a unique background in real estate in general.
Way closer.
My family's
There
been
you
in
are.
real estate for my whole life.
Okay.
My grandmother's was basically kind of spearheaded Redfin in Austin, so I had a really good look into that when I was young, and that's kind of where my interest peaked with that. I mean, back in the day when Redfin was salaried agents, and then I moved to Texas 10 years ago to continue training horses.
Okay.
So I had a background in sales already, and then I got really burnt out doing that. And she got me into the title side of it, working for Austin Title. So I learned the back side of it, and I kind of was sitting there going, man, I'm just signing all these commission checks. Like, this is ridiculous. Like, what am I doing here? I could do this. Like, unfortunately, I was doing a lot of agents' jobs. And then I left Austin Title and moved into commercial real estate, doing the same thing, but on a commercial level, and got another realm of experience with it. And during that time, I got my license. And then COVID hit. So I got hit multiple times over still doing commercial stuff on the back end, and doing my license there, and linked up with a developer who I still work for now. And so it's been really interesting to, not only sell real estate myself, but also work for a developer here in the city of San Antonio that gives me an inside track to what's going on in the city, how things, work, and just affordability for housing, and who's struggling and who's not. And
Yeah.
it's really interesting. So that's kind of my background, and I don't see it changing anytime soon.
Well, I love the fact that we're getting to see this, and we'll be able to kind of attack this from multiple perspectives. And that being, a lot of times we tend to only think of ourselves as home buyers and what is the policy going to and how it's going to affect me. Whereas we don't think about how it affects the builders, the folks that are actually providing the properties that we can purchase.
Oh, yeah.
And for quite some time now, it's been difficult for them to put more homes on the ground. We'll just call it that. So kind of to kick this thing off, I wanted to discuss the different policies, what we're seeing in the media in regards to what you've got Donald Trump, you've got Kamala Harris at this point, the two camps that are vowing for our votes, essentially. And just like they said in this video, I think home affordability is at the top of the docket, in my opinion. And if it's not, it should be. It kind of keeps our economy flowing. It keeps it moving and keeps it growing. And I believe that home ownership is the one driver that will lead to generational wealth.
Yes.
I mean, that's
Yeah.
just the one thing that if you as a renter versus a buyer, and John, you've mentioned it many times before, the net worth of a homeowner versus the net worth of a renter.
400,000 to 10,000.
Super simple, right?
That's as easy as it could get. 40x.
Yeah.
Yeah.
So I pulled up, and JC, if you want to go to the references real quick, I pulled up something, and I like to use ChatGPT. So this is showing for 2024 U.S. presidential election, the candidates have proposed a range of policies to address affordable housing, reflecting their broader economic vision. So I don't know where it got these from, but it got them. It says Kamala Harris, Democratic nominee, building 3 million new homes. And what I'd like to do is maybe go through each one of these and provide some feedback on them. Building 3 million new homes. Harris plans to contract 3 million new homes, both for sale and rent units, by reducing regulatory barriers and speeding up the local permit process. This initiative aims to increase housing supply and reduce cost. Me personally, I think that's great. It's more so a issue of how. Do you guys want to add anything to that?
Well, I was just going to ask our guest, having worked with local PNC, how easy is it to get $3 million just like that?
Good luck. Good luck. Good luck getting the permit process. I mean, that's why our government exists and has checks and balances, and why we have a state government and a federal government. She can't insert herself into the state government. That's just never going to happen, especially in a state like Texas
Mm-hmm.
with a governor like Abbott, and probably whoever comes in after is going to be very similar.
Mm-hmm.
Your permitting process just is never going to, you're not going to speed it up. State
Yeah.
level, city level is completely different than on a federal. And I'm all for it, because when things got expensive a couple of years ago, it was because building costs went up because of regulatory, and it's supply and demand.
Sure.
But there's no supply and demand with permits. There's a backlog months and months long.
Absolutely. And you speak of supply and demand. I was watching a clip yesterday. It was actually CNBC, and normally most of them are all biased, but the actual reporter was kind of pushing back a little bit. The idea of regulating prices at the grocery store comes along with price control. And the senator kept saying, well, there's states that already have these policies in play. Well, yes, they do. And why is it that you believe that you should inject whatever it is that you're trying to do to it? Because you're using data that is inaccurate, essentially, to kind of fake the public into thinking that price control is a good thing.
Well, you just named it, fake the public.
Mhm.
I mean, it's pure political tapestry. I mean, that's all that was. And that was a brilliant debate between
Did you see
Liz
it?
Warren
Yeah.
and Joe Kernan.
Yes, sir.
Which, typically you don't get that kind of pushback
right.
from CNBC of all people. So that was really refreshing. And just to add on, right? You mentioned Texas, but holy cow, even her own people in California.
Mm-hmm.
How long do you think the entitlement process is to even get a piece of land ready to be developed
Yeah.
before you even move a shovel?
10 years.
Yeah,
At least.
right.
Yeah.
So it's not
Because you got to
feasible
go-
to just
Yeah.
say, hey, we're going to add 3 million new units, unless we're talking state-run
Right.
apartments,
That's what I'm thinking. Correct.
right?
That
Projects.
that is land already owned by the government,
Right.
which is also rare, and
Very-
more likely to be owned by China than us.
It's owned by a couple of REITs, and they don't care.
Yeah.
They don't care. They just condemned one in South San Antonio. Said it's a nuisance to the public. And I had a pretty good insight to that. And it took 5 years.
Mm.
I mean, they're running the cartel out there. And if that tells you anything, they just don't care.
Right. So I guess with trying to be unbiased in this, I'm going to go back and forth.
Sure.
Because it looks like there's 3 and 4, so we can at least get through some of these backwards and forwards. So under the Donald Trump Republican nominee campaign, you've got number 1, opportunity zones. Trump's administration previously established opportunity zones, which offer tax incentives to investors and economically distressed communities. This policy will likely continue, although its effectiveness in providing affordable housing has been debated. What are your thoughts on that? I like the actual policy that he put in play. I've heard and seen many take advantage of this, business owners, investors, putting big dollars into projects and essentially saying it was a damn good policy that was in place, because it gives not only them as the investor the opportunity and the benefits, but also whatever it is that they're building to the public, giving benefits that way as well.
Right. I mean, the thing with opportunity zones, and trust me, I'm not for big government jumping in.
Right.
Not at all.
Correct.
Same.
But there are cases where things do have to be subsidized by everybody else. And in a lot of cases, because of who knows where it all started,
Yeah.
the reality is today, the only way that you're going to really be able to help a developer and a builder to go out there and do what we would call affordable housing
Mhm.
is to subsidize it to where it's economically viable for that home builder or developer as well.
Correct.
Because otherwise, builder developer is just going to say, you know what, my margin's a lot better in the $500,000
Right.
area. I'm just going to keep focusing on this.
That's exactly
When
right.
what we're missing is the 200,000. So I'm all for tax incentives.
Yeah.
Because that way it's also not just a blank check being written by the government and saying, here, go do this. It's you have to put the work in first, and then you're going to get it later.
You get the benefit out of
Right.
it. Correct. And it goes kind of hand in hand with some of the things that I don't quite agree with, raising the taxes on the wealthy or corporations. I mean, it's already shown to lead to less productivity, less hiring, less passing down to the actual consumer and the employee. In many cases, you've already seen studies that show by decreasing the taxes on corporations, they bring in more revenue. Revenue then provides more pay for those employees. And it increases productivity for some odd reason. You give incentives to do better and people end up doing better. Weird.
What a concept.
Right? What a concept. So let's go back to Kamala's stuff. And I'm going to skip number 2. We'll talk about that one last. It says rent relief programs. Harris supports significant investment in rent relief, including a $100 billion commitment over 10 years to assist low-income families facing housing insecurity. What are your thoughts, guys?
My initial hot sports take, I'm great with, it's basically Section 8 is what
Correct.
that is.
Yep.
It's just expanding the Section 8 program. I believe that the challenge there, though, is, and again, it's frustrating. It's how that money gets dispersed on the local levels, because big chunk gets cut up top, and by the time it funnels all the way down, it's really not helping as many people as it should be.
Right.
And so you still have so much waste that's stuck in between.
Very true.
And then at the same time, too, are the units really good places for the people that are low income
to be there? Correct.
Right.
Yeah, I don't disagree with that. The idea of building more of the Section 8, also something that they never will own. Does it not add more to the idea of staying on the government teat, so to speak?
And that's the real challenge, right? I mean, I do believe
Time
that
constraints.
there should be strings attached.
Yeah.
Right.
You
This
need
is
to-
a temporary fix.
Exactly. I mean,
No, go for it. Either one.
Anywhere we look when we do a government program, there should be a clear path forward to get you off the government assistance. Government assistance was not built for people to live on it forever. And guess what? They're all doing it.
That's right.
Why do you think Chicago's in shambles? Why do you think any of these, and I'm going to run on it,
Do.
Democrat cities are like this? Because they don't have any term limits. They just keep getting handouts and more. For the fact of the matter, you asked me about the illegal immigrants, the housing for illegal immigrants. They're going to keep taking.
That's right.
As long as we keep giving, they're going to keep taking, to the point where we have no money left to give. So then it keeps coming out of the taxpayers' pockets. We keep raising the taxes, and it goes back to more taxes. We're less productive because you cut down your margins. And I'm sorry, the wealthy, when they feel tight, they don't spend money.
No.
Middle
How do you think they got? Well,
Middle
yeah.
class is more likely to overspend than the upper class.
That's right.
Just-
That is
just
true.
Back to the matter.
It's true. It's very true.
Just to kind of pile onto that too, and it just dawned on me. And so, like Haven for Hope,
Mhm.
right? That is it's a private nonprofit,
Absolutely.
Yeah,
but people can't stay there forever.
No.
correct.
But what they do is they get them in, they give them a temporary place to get them back on their feet,
That's
and
right.
then let 'em
Haven
out.
for Hope, Arms of Hope, year-long commitment.
Mhm.
And that's it. Then you got to go. You have to have your stuff together, and you got to go be back in the world like a responsible adult.
Yeah.
Hopefully.
And I see no issues with programs like that. I mean, there are times when folks get down and out and they need a
Absolutely.
little bit of
Yeah.
help.
And I'm all for it. I want to help them. I want to build a community that does that, but not so that we're just supporting them for the rest of their lives.
bingo.
Right. And it turns out that most of these type programs end up being a prolonged crutch that then becomes reality. And all of a sudden, we're 10 years later and wondering why this area of town is still run down,
Yeah.
why there's nobody wanting to invest in this area. Why the folks in that area tend to have a lower IQ, lower income, lower many things, you know?
That just reminds me that I've heard it. I got to see George W. Bush speak a couple times, and man, he had a great quote about that. And it was interesting. Long story short, but he said that one of the worst days of his presidency wasn't necessarily 9/11, but it was when Kanye called him racist during Katrina. Remember that?
Yeah.
But he kind of went off into I mean, he was really like genuinely hurt by that.
Right.
And he went off into kind of a different story, but he made a quote, and it rung with me, and it was one of the worst forms of discrimination is that of low expectations.
That's very true, and I have to from a minority. Ding, ding, ding.
Yeah.
I believe that is accurate. I mean, you are setting the bar too low for people. They believe they're doing well because they're hitting the bar, so to speak,
Right.
but the bar is way below the expectations of what it takes to thrive in this world these days, but how folks can't see past it, I don't know. I don't know, and that's not something we're going to talk about today.
That's another topic.
It's another topic, yes. Okay, let's jump back over to Trump's stuff here. Number 2, reduction of housing regulations. Trump advocates for reducing federal regulations that he argues inhibit housing development. His approach includes rolling back certain zoning laws and promoting free market solutions. I like the idea of free market solutions that allows people to compete. It allows plenty of things to kind of take place and run themselves that are all intended to help that investor and also help the consumer.
Right.
What are your thoughts, guys?
I mean, the country was founded on capitalism and free
Amen.
markets, so
Amen.
I'm all for it.
Let's have the capitalism conversation, because there are plenty of folks out there right now in this discussion that will go, see, that's the problem. Capitalism is the issue. And I believe those people tend to confuse capitalism with greed.
Yes.
Greed is something that can affect anything good. I mean, at the end of the day, greed is greed.
Yeah.
Capitalism is the idea of free enterprise. It's the idea, if I work harder and have a product that everybody wants, then I can make a living, and not only make a living, help more people that way.
Yeah.
What are your thoughts, guys?
I mean, you got to have capitalism, right? I mean, why is it that China is the one stealing all of our ideas? Right? I mean,
Literally.
I mean, like literally.
Yeah.
Even to Disney, for crying out loud.
Yeah.
But it's true though. I mean, that they're a state-run communist country. I mean, just quasi-capitalist, whatever you call it, right? But in reality, they're not fraught with innovation.
Right.
America is.
That's right.
We do have the ability to think and grow and test. Look at Elon Musk.
Absolutely. Great example.
Prime example.
He chose America.
Yes.
Right. To come here and have the opportunity to build. I mean, the guy's landing rockets in the middle of the motion on a robot
Did you
ship.
see that NASA stuff? He's about to save them too.
Yes.
Weird. NASA denied him a while back from working with them. And I think that was the moment when he actually cried, because he was hurt. Like, this was my dream. And you guys are shitting on my ideas. And now you're going to call me to save your ass.
Yeah. And he didn't have to go and buy X. He didn't have to do that. And the man is giving up his livelihood to show the world that, look at what the media is doing on both sides, running with it. I mean, independent journalism is the only way that people are getting their news these days. And it's incredible what he's done. And he's not a citizen here.
Right.
He might have dual citizenship, but he wasn't born here. So why? I mean, he wanted to be here. He didn't have to be here. He could have stayed in, I think it's South Africa, right?
Correct.
And granted, there's not as many opportunities there, but he came here for the opportunities because he believed in the American dream. And the American dream was built on capitalism, and it's withering away.
Yeah.
At this point.
Well, you got a great comparison, right? You call Elon the free market versus government, and just considered Wi-Fi access for the rural communities.
Mm-hmm.
Government spent how many billions of dollars for that? And I think I saw it was like, for the price of what the government spent on their system that has never worked.
Correct.
They could have essentially bought Elon's system for everybody in the country.
Yeah. Literally.
Free internet. That's crazy. Or even the charging stations.
Yeah.
The government spent what, $50 billion, and they built 7? Yeah. 7.
Yeah.
Versus,
where'd that money go?
My wife drove to Colorado in a Tesla the other day, or a couple weeks ago.
Yep. That's exactly right.
Yeah.
And I like the question that you prompted there. Where did the money go? John had joined us for a part 1 and part 2 of a U.S. Debt crisis, where we talked about the different buckets that our money is being used. And to me, does it add up? Sure, on paper, but then you go deeper into why does it cost this much? Where the hell is the money going? Because it should start benefiting if we are using it the right way. But it's just not. We're sending money off to foreign countries that we're not even associated with.
We're leaving how much in military assets places?
Yes.
Well,
There you go.
And it feeds back into inflation, right?
Yes.
So if you have whatever policies you're putting out there have to be things that are ultimately going to reduce inflation, because that's going to ultimately reduce cost.
That's correct. For the consumer.
Make things more affordable for the consumer. So you ready for some data?
Please.
I got some numbers.
Heck yeah.
Okay. So I pulled this off the Texas A&M Recon website. Have you been on that?
Every once in a while,
Oh my gosh, I love it.
Yep.
Love it. Even though I'm a horned frog, not an Aggie, but I love their system. So, but look at this in July of 24, right? So San Antonio metro area. So that's San Antonio, New Braunfels. The map even includes Hondo, whatever. But 3,310 sales. Median price was $320,000. The average price was $378,000. So I thought that was kind of interesting, right? So you've got some outliers that are right. You've got some higher dollar properties out there being sold. Now, compare this to, and I broke it down all the way throughout the years, but so compare this to July of 2019, pre-COVID, 3,525 units sold, right? And so obviously that's new and existing. Median price $235,000. So almost $100,000 increase in 5 years, which the average in 2019, by the way, was 271. So 271 to 378. So now keep in mind and follow me here for a second. The median income in San Antonio today is $89,300. Now back then it was like $55,000.
Okay.
So you had essentially inflation in housing well above right what people's incomes are going across. Keep following me here. So this is P&I data only. I didn't include taxes or insurance because this would be much more inflated. But and I just used a 95% loan to value, just conventional loan, 6.75 interest rate, which is about market today. P&I on a $320,000 sales price, 95 LTV, P&I would be $1,972. Follow me here. In 2019, rates were around 5%. So I took that $235,000 sales price, took a 95% of that. At 5% note rate, $1,198. So you have almost an $800 difference
in just the principal
and interest. What's kicking everyone's ass right now? Homeowners insurance increases,
definitely.
Property tax increases,
absolutely. Yep.
Even with the
new homestead exemption cap, absolutely.
Yeah. So even with the cap, we're just going to raise it over here.
Yeah.
But so where I'm going with that though is all these are all inflationary items. So the cost is far outweighing what people's incomes are.
Right. And correct me if I'm wrong, but this inflationary data is not included in our inflation rate.
No, it's not. So when they're in that video, they were talking about, the Fed says, inflation has stopped. That's ex-shelter.
That's correct.
So that takes housing out of the equation. So that does spurn, another question is what's going to happen as the Fed lowers rates, right? Will mortgage rates come down? Remains to be seen. But on top of that, though, does it possibly get us back into a feeding frenzy?
Yes. And that's what
and
we've
raised
been
up home
talking
prices
about
again.
quite a bit, because the idea of supply and demand that we go back to, there are plenty of folks on the fence right now that are ready, willing, and able to buy a home. Maybe not willing, maybe ready and able, but not willing.
Right.
And the idea of being willing has to do with that payment comfort and believing that rates are going to come down, believing that the property values or sales prices are going to come down. But if you take a step back, you don't even have to be a rocket scientist. Right here, guys, you don't have to be a rocket scientist to determine that if rates come down and all those folks just like you jump back into the market, we're going to have a feeding frenzy, just like you discussed, and prices are then going to rise yet again.
So we get, what do we do to get these people off the fence today?
Educate. Sometimes you got to smack them.
Yeah. I mean, literally put it out there.
Yeah.
And you're right. I mean, so yes, the Fed is going to cut rates.
Yep.
But how quickly is that going to bring down mortgage rates?
Well, in all honesty, that principle or that idea, do you not think that mortgage companies, guys, are already planning for this, already have some of that priced into our rates thus far? We're not, what is it, reactionary?
Reactionary, yeah.
Yeah. Essentially, we've got some of that already.
The bond market is like the smarter cousin of the stock market.
There you go.
Yeah.
I like that analogy better.
They've got analytics to where they can almost see the future a little bit brighter.
Right.
And so what's happening there, right, today, mortgage-backed security prices, which drive interest rates,
Yep.
are at the highest they've been in over a year
Mhm.
because they're already seeing rate cuts.
Yes.
But, if there's an inflation report that comes out before then. So if that inflation report comes out hot, then it goes from the market thinking, oh, we're going to be four rate cuts in a row.
Mhm.
Now it might only be 3.
Right.
And so then mortgage rates that day might get worse.
Correct. Because they had already made the adjustment thinking it would.
Right.
That's right.
So my message to prospective home buyers out there kicking tires is buy now.
By now, you can always refinance.
Yes.
Absolutely. Absolutely.
That's the simplest way to put it. And I tell people that all the time. By now, you can always refinance because guess what? In a month, you might kick yourself when the rate's back at a 7.
Yeah.
Well, and I can
Coulda,
tell you
shoulda,
that half a point in rate that you're trying to wait for
Yeah.
doesn't make up the difference in $100,000 in price.
No,
No.
it doesn't. No, it does not. That's a great point. Let me see here. Did I lose my reference? Hopefully it'll click back. All right. JC, let's go back to that Perfect. And we're back to number 4, crackdown. And this is under the Kamala Democratic nominee, crackdown on corporate landlords. Harris plans to address the issue of rent inflation and housing shortages by cracking down on corporate landlords who monopolize rental units and drive up prices. I think this has a lot to do with the smoke and mirrors that we are seeing with the inflation of, for example, utilizing eggs. One company in the industry is driving up the price of eggs. Well, that company, eggs are not monopolized. So
Right.
the idea of
commodity.
that's right. The idea of one company driving up the prices of eggs is absolutely asinine.
Yeah.
Why? Because that's not true. If that was the case, the others would just undercut them and they would essentially lose plenty of potential profit or revenue coming in. Same with anything similar to this aspect. If you've got one building, let's say it's an apartment complex, next to another apartment complex, well, chances are they're both owned by corporations. They're going to have to get on the same page if they want that concept or idea to stick. But then at the same time, you've got these rental homes that are right next to this that if they don't get on board, well, then they're going to go that way. And then these are not going to fill up in regards to residency.
I mean, the market is the market.
Right.
And so all that is, again, that's just political wish-wash that's trying to build hey, it's us versus them. We're the little guys. Big bad Wall Street is they're the ones that are beating up the little guy.
Says Oprah Winfrey and
Yeah.
weird.
But where I was going to go with this, and I got a chart. I'm going to send it to you because it'll mirror this perfectly.
Yep.
And because I know where they're going. It's like, oh, BlackRock bad, which I'm not a fan.
I'm not a fan either.
But
no.
you know what? Hey,
but we have to have them.
good
to
on
be
them
honest.
and good on them. But what it showed was like the percentage of units of owned by basically corporate landlords, right? And these were single family houses,
Sure.
owned by like a BlackRock or maybe it was like 3%
Right.
of the market. Everything else is owned by mom and pops.
That's exactly right. And I've shown that statistic in many of the videos that we've done. I don't know if enough people aren't watching that portion of it, but it's very clear that when you go, BlackRock's buying everything. Well, here's the real data, guys.
Right.
It's actually us that are buying.
Your neighbors.
That's right.
It's everyone else. And right now they're getting their asses kicked.
Yep.
Because of property taxes, homeowners insurance, and the market is actually not letting you raise the rent like you want to.
Right. So that in a nutshell seems to be another broken promise that most should be able to determine for themselves, the supply and demand, the idea of capitalism going into that. But it sounds good.
Yeah. No.
It makes it sound like, hey, we're going to go after those guys.
It's all about the pander bears.
Yeah, and it's just how they put it on paper and what people they look at things at face value. They don't actually hear what's being said and go, logically, that it isn't going to work, because they hear it at face value and they, oh, okay, it sounds like a great idea, because they don't have to they don't turn their brain on.
Correct.
And think.
That's
like,
correct.
God forbid.
Okay, let's go to the last one from Trump, and it says cuts to HUD funding. During his previous term, Trump proposed significant cuts to Department of Housing and Urban Development, which critics argue could reduce support for affordable housing programs. What are your thoughts on that, guys?
I don't like it.
Me neither.
And having spent a lot of time in Washington, D.C., I can tell you that HUD is very outdated. I mean, they actually need more investment into HUD. But again, I think it's just bloated with with government waste more than anything else. But a lot of programs, a lot of state down payment assistance programs rely on HUD funding.
That's right.
So I again, I think that's, we're going to cut government out. That's taking it too far to the other direction.
Sure.
And so that one, bad idea.
Yeah.
It's a
And
terrible
we're
idea.
not here to have you vote for a candidate, guys.
No.
We're here to present facts, give our opinions on those facts, and both sides have some dumb shit in them. Let's be honest.
Yeah.
But I want to go back and hone in on one that seems to be heavily marketed in our media. And it has been marketed for the past 3.5 years with zero idea of how it's going to happen, zero idea of when it's going to happen. It's just this thing that they keep putting out there that sounds really good, but when you dig into it, you go, wait a minute, this probably couldn't work, because most folks will get into this. So what I'm talking about here is the $25,000 down payment assistant. She has proposed $25,000 down payment assistance program for first-time homebuyers aimed to make homeownership more accessible. Let's break that down a little bit. $25,000 to home buyers. And before, Biden was proposing first-generation home buyers. That has since dropped off to probably pull more attention to the idea of it. But let's break that down. What are your thoughts on this? Where does that money come from? Where does it
The
go?
taxpayers. It's a terrible idea. Like, okay, you give somebody a $25,000 grant to go buy a house, but then that house that they're going to buy becomes $25,000 more expensive
You nailed it. Wow.
to find a way to cover the cost of it.
That's exactly right.
I mean, it's not rocket science.
Can you break that down for us? Why is that the case?
So, I mean, again, it goes back to, what's the word I'm looking for? Not supply and demand. That's the wrong way to explain it.
Basics.
Basic fundamentals. You can't say, okay, here's a $25,000 check, but I don't know where the money's coming from, and then I have to find it somewhere else. It's just like, okay, great example, builders. I had a deal last year. I had some clients that wanted to buy this deal so bad. The builder was offering X amount in closing costs, but what my clients didn't, because they're like, oh, great, we're getting $40,000 off this house, or $40,000 in closing costs. I said, no, you're not. Because if I show you a price history, as soon as they started offering XYZ amount in closing costs, guess what they did? They raised the price to cover the cost of that. But what people don't see, they don't see that from the backside, because and that's, again, one of those reasons why I see why the NAR lawsuits went through, because there are certain things that are not transparent that need to be transparent.
That's right.
And things like that, because they don't pay attention, they're not taught to pay attention, and or their realtor is just clueless and doesn't tell them.
Brianna, I applaud you as a realtor. Just not hitting that on the money.
Me too. Not many would come out there and say it like it is. So I appreciate
I
that.
get so tired of getting, and I get it. I get a lot of clients that are like, my realtor didn't tell me this, my realtor didn't tell me that, and it's just basic education. And I think maybe because I came from just a general sales background and a background in seeing, understanding how a CD looks, coming from a title, I understand it far more than most people do. And I can read and tell you every charge, where it goes, everywhere it comes from. And hey, oh, you're getting this credit here, but guess what? It's on the backside. It's not really a credit. That's where you're getting charged for it.
I think John and I both can agree and are appreciative of you talking about this, because we have put plenty of content out there, and other lenders, same thing, because it's tough for us to capture a client, help them with their credit, get them to the point that they can buy, and then they jump off to a new construction home that the realtor sent them, did not educate them on where it is, and now we're being played against that builder without being told the premise from the realtor, because we're the ones telling them and educating them on where the money's coming from. But the realtor on that side,
well, there's 3% plus a $10,000 realtor bonus on
there you go.
Yes and no. So I mean, and I can talk about this too, because unfortunately, and this is where you guys get hurt. Not the small builders, the large production builders that build the cheaper homes, Lennar, D.R. Horton, DHI. In the last 3 months, I've done 7 of them. And I've had all my clients pre-approved with a lender. And I call them and I apologize every time. I'm like, they just can't afford not to take the deal.
Right.
When they're getting a 3.75 rate versus a 6.75 and, another $10,000 in closing costs. And I can't tell them not to take it. I mean, that just.
Absolutely. And if I'll take it further, if those builders were bound by the same regulations that we were, they would have to put that on the closing disclosure.
Correct.
And fortunately for them, they don't have to. It's behind the scenes with a joint venture with the actual mortgage company that allows them to buy a massive fund that says you've got $10 million at this rate. Get rid of it.
Yeah.
That's right.
And that's what I tell clients too is, they ask, well, how are they able to do this? Why can't your lender? And I said, look, what you don't realize is every time I get a loan sheet from Lennar or DHI, I send it straight to him and say, can you beat this? And he calls me. He's like, why do you send this to me?
That's right. We don't have the extra money.
He's like, I don't have the extra money. Every once in a while on something a little bit higher priced, in the anywhere from $350 to $550, he might be able to get close. But when we're talking 200 to 250, maybe 300,
in payment difference, yes.
Exactly. You can't, especially, I had a client this week that had to be an X amount of payment. And there was just no way he could beat it. And I tell clients that too all the time. Look, they're bound by a completely different set of rules. And I show them both contracts. I show them a regular check contract and I show them the builder contract. And they're like, well, I just signed it. I didn't read it. I said, that's also a problem.
Because it's 50 pages.
That's right.
I said, that is why my job exists.
Yeah.
They're like, do you read that? I said, every single time, because the one time I don't, they're going to sneak something in there and you're going to get screwed.
Yeah.
And I cannot do it, because guess who actually gets screwed? It's me, because I'm going to be the one that probably foots the bill when something gets messed, because it was my job to read it for you. Because I know that you're not educated on that. That's my job.
That's right.
So, and unfortunately, there is a lot of times I see it happen. I'm in Facebook groups all the time, and I see a builder's doing this. Do they have the legality to do this? And da-da-da-da. And I'm like, they did, because you signed the contract.
That's right.
It.
You signed it. That's exactly right.
So I want to follow up on something though.
Please.
So is the NAR settlement helping with consumer affordability like promised?
I really not paid attention to it, nor do I care about it, because I've always proven my worth. I've always explained to clients how they get paid, where they get paid, that actually, in actuality, the buyers have still always been paying for it. It just usually comes out of their loan proceeds going to the seller, and it's just a circle of life.
So you were a realtor in Texas utilizing the Texas form that we utilize, buyer representation, and believe in your value and can articulate your value. So strange.
Right?
So strange. John, what I want, if you've got something, go for it.
Well, I was just going to, piggyback on that. And that is, again, it was this administration's Department of Justice that was saying that this is going to help affordability for consumers.
That's right.
Because, all these realtors aren't going to get paid anymore.
A lawyer found a loophole.
Right. Well, Mark and I, it was a money grab by plaintiffs' attorneys is what it was.
Somebody won in this.
But it was sold as it was going to help with affordability, and it's not.
That's right.
Either,
it makes it tougher, if anything.
Right. What makes it tougher, one thing that I'm starting to see popping up, right? I mean, of course, it's all brand new, but buyers going to buy houses without representation. So
and they're going to get screwed.
They don't have a professional negotiating on their behalf,
right.
Or
just even advice like,
hey, get an inspection.
Yeah, I'm starting to see dual agency.
Builders never tell you to get a third party inspection. Never. And I tell all my buyers, we are not. And if you can't afford it, I will pay for it, because
it's awesome.
I've had people come in. I've had my inspector here that's local Found one that they left crap on the roof. They left a tarp on the roof. So
Wow.
it's just things like that without somebody advocating for you in your corner,
Right.
you're going to get screwed and you're going to lose more money than it's worth. Find a
Which is why we get to have buyer's agents. I mean, I'm sorry, that's the whole premise there.
Absolutely.
Now, did things maybe get skewed and out of hand? Sure.
Absolutely.
It's like the
Yes.
mortgage business. We got
That's
slapped
right.
around 10 years ago.
That's right.
Yeah.
But still, there has to be a representative for the buyer, to protect them. So that kills me when I hear that, oh no, this is great for consumers. And it's like, no.
It's
Yeah.
just the
How?
media.
Explain to me how that
They
is
ran
possible.
with it. The media ran with it, just like they do with everything else. Fear mongering. They hear one headline and they're like, let's run with it and let's just blast it everywhere to a point where people are like, I don't know what to do anymore. I don't know what to do anymore. And I'm like, if you actually sit down and read through it, it makes total sense. It's what we've already been doing. We just don't explain it properly.
That's right.
Never taught to explain it properly.
Right on the money. Right on the money. I'd like to see if ChatGPT is smart enough to know this as well, because let's just see here.
Yeah,
I'm
yeah.
going to say, how would the $25,000 first time home buyer, oh goodness gracious.
With Dontonics.
First,
Different keyboard. It's always my excuse.
yep, first time buyer credit affect home buyers, and how will they pay for it?
Well, it's going to hurt them because it's basically supply. I mean, we don't need demand promotion right now. We need supply promotion. So what does it say? Increased homeownership access. Okay, potentially good. Market demand. Again, we don't need more demand.
No, we don't.
There's more than 13,000 34-year-olds turning 34 every single day for the next 10 years. That's prime first-time buyer age. They don't need demand. We need supply.
That's right. And it actually gives us what it should. There's a concern that increasing demand through financial incentives could inflate housing prices further, particularly in already hot markets. This would reduce the overall effectiveness of the credit in making housing affordable. Funding the $25,000. So federal budget allocation, target tax increase, relocation. It's one of those things that all you have to do is do a little research of the basics.
Yeah.
What we learned in school: supply and demand, budgeting, checks and balances.
We didn't learn that in school. They don't teach that anymore. They
Well-
haven't taught that.
Well, the hard part is, right, there's no sexy 30-second soundbite in mortgages.
Correct.
In reality, if they really wanted to give money to help spur and help with affordability, they would help fund the mortgage credit certificate program.
Agree.
Which helps consumers with their payment.
That hasn't been talked about in a while either.
Yeah, let's talk about that.
But we're advocates for it.
Because I have one that someone had mentioned, and I think you saw it, and I thought it was pretty genius, which if you are going to propose something to help first-time home buyers, and it's not going to be related to helping the payment, and you want it to be for down payment, why not make FHA, which is a government-backed program, zero down?
Yeah.
All of a
Just like
sudden,
VA.
just like VA, and mimic that concept. Because the idea is you guys have been bleeding the home buyers with mortgage insurance for how long, with the lowest rate possible of foreclosures in that sector. Where the hell is all the money?
Again,
Government accounting.
Right. Weird. It just kind of slips through the cracks, but yet we're upside down.
this country is a business. When you own a business, your partners have to see a profit and loss statement. I've never seen one. I've never seen one for this country. So, yeah.
I was going to say, pull up the debt clock. There's your P&L.
That's exactly right. That's exactly right. So that being the case, do you guys have any additional solutions that could make home affordability possible? I don't want to stay on the Democrat Republican thing. This is not a political show. We are here to provide you guys, again, with data that we can find. It is to help interpret that data and to do the heavy lifting that some can't or aren't unable to find the data for, don't have the time to, and only able to listen to sound bites. And maybe you're basing your vote on that. I don't know. But us as the mortgage real estate experts are here to kind of chop it up a little bit for you. So do you guys have any potential suggestions similar to the FHA concept or something close to that?
My biggest point is fund the mortgage credit certificate program because it is for first-time homebuyers and veterans and targeted areas. There are income limits, right? So it's not like it's feeding the rich.
No.
Right? It's there to literally help people, and it's with the payment. There's already plenty of amazing, great down payment assistance programs out there.
Yes.
We don't need more down payment assistance. People need help with the payment.
That's right.
Because inflation has kicked their ass.
That's right.
So, and again, if you're not cutting just blanket checks of here's 25 grand, but it's actually per loan, per month, per taxpayer, then I think it's also more easy to finance.
Yeah.
From the government perspective. So I love the zero down idea for FHA. They should also go to risk-based MI.
There you go. I like that. Yep.
So
instead of it being a fixed amount,
go to risk-based. Lose the lifetime MI sales pitch because it's a government accounting. It's all joke. But no, I believe that FHA is the best program out there. But it also allows itself to be taken advantage of because it allows for the highest debt to income ratios of any other program.
That's very true. Very true.
So somebody with a 590 credit score shouldn't be financing a house with a 56 back ratio.
56.99 sometimes.
Right. So but I think it all does revolve around FHA and HUD and cleaning it up.
Yeah, definitely. And I think that there's plenty of opportunity to clean that up versus having to throw out stuff that is unjustifiable. It does not, you can't make it make sense without it harming someone else or even harming the person that you're trying to help in this case scenario.
Yeah, and I hope whoever does win, one of the Mortgage Bankers Association has been constantly advocating for there to be a housing czar.
Yeah,
a housing czar. Put somebody as a secretary of HUD who has
somebody from the private sector.
Sure,
private sector who has experience with this, because right now, the last 3 or 4 HUD secretaries have had no true experience with housing and development, period.
Right.
They just say, oh, I needed somebody in the cabinet says, we need to give him a job, so we're going to give him this job.
Yeah, you get housing.
You get the, what is it, that show, Designated Survivor. They gave it to him as here's a piece of candy because we needed to give you a job kind of thing.
Yeah.
But I mean, I think personally in the long game, and it starts with education. Like I touched on earlier, they don't teach simple things in high school anymore. How to balance a checkbook, how to do your taxes. I would have loved to learn about a mortgage and whatnot because coulda, shoulda, woulda. I could have bought a house when I first moved to Texas 10 years ago. Sounds terrible. I'd be rolling in it. If I bought something 10 years ago, even
and you would have, by the way,
or San Antonio or something, I could have had that. That could have been, a retirement fund or something for my future children to have for college. And because I wasn't taught that, I didn't know any better. Nobody just said, hey, this is how you do it. It starts with education. We need to go back and just educate the younger generation, because, most of my clients are my age or a little bit younger, and they have not a clue anything. Or their credit is so bad because nobody taught them that taking out 100 credit cards, racking them up, and leaving the balance as high is a bad idea.
Yeah.
Or not paying on your student loans. That's actually something that we need to do. We have to reform student loans.
And I actually
those are killing potential home buyers.
I actually just had a teacher on last discussion. And for those listening, you've already watched it last week. That'd be coming up. But that was a big topic of discussion, is the education, not only for the students, but also the teachers that are out there, is determining why the teachers are going into a profession knowing that they're not going to make what others make, so to speak, and spending like
$200,000.
Right.
Yeah. I mean, I have $40,000 in student debt, and I don't care if people can know it. But had I known that was going to be that bad and it was going to hurt me as bad as it did when I went to buy my house, I would have never done it. I didn't even graduate.
Yeah, same.
College. And even if I had, I wouldn't use my degree.
Yeah.
And here I am with all this student debt, and nobody ever taught me that this is a terrible idea.
Yeah.
Terrible idea.
Mark, I've got some fun facts.
Please.
Okay.
I love it.
And I love it. 100% of what you're saying on education, because that ties right into this. So this is a survey from First Home IQ partnership that's out there, and they did a study or a survey of Gen Zers. First of all, 58% of Gen Zers say that rent is keeping them from buying. Right?
Mm.
The rent is too damn high because, well, it's hard to save.
Yeah.
It's hard to
Very
save.
hard, yeah.
You can't save anything if all your money's going to rent. But this was interesting. 39% of them said a lack of knowledge about housing and buying a house is a barrier.
Mm.
Mhm.
So people just don't know what they don't know. And this one was crazy. So still 20% of Gen Zers still believe that you need 20% to put down to buy a house.
Wow.
I hear that way too often.
I agree. Hey, shameless plug for all of those that have a friend like that. Send them to reviewmymortgage.com where they can, without a loan officer, research different programs, down payment options, and basically put your loan together that allows you to get behind the curtain. You don't have to have a loan officer to educate yourself. Absolutely.
Yeah.
Play around.
Matter of fact, they do it with everything else.
Yeah.
The internet's massive and the information is out there. You just have to go look for it.
Check out the loan bot. And then this was interesting too. Trust is a big deal.
Mm.
And so this was fascinating to me. 58% of Gen Zers said they would trust an LO to help them make smarter mortgage decisions. And 67% said they would trust a realtor to help them make smarter smarter decisions about buying a home.
Right there proves our value.
That's
So,
right.
Well, my thing is, it should be 100.
Right.
Yeah, it should be 100.
Right.
I mean,
Where's the discourse coming from?
Yeah, where's so they've watched too many episodes of Better Call Saul. You know? It's like
That's
no,
good,
that's
yeah.
not how we operate.
Right.
But anyway, I just thought that was fascinating data, and it tries right in with the education component, and that if people are more educated, guess what? Then they don't have all the debt, and then they can't afford more house.
That's right. And it seems to stem either from our education system or in our households.
Mhm.
And households isn't getting hit hard enough in this discussion, but I'm going to hit it right now. The idea of us becoming parents and teaching our kids some of the things that our parents didn't teach us by way of education. Let's say they didn't know. A lot of parents didn't want their children to think that they had a hardship or came in way of a hardship or any of that. So they just didn't talk about it.
Yeah.
That, as you fast forward, leads to that child who is now an adult doesn't know anything.
Thinking the world is rainbows and butterflies.
Rainbows and unicorns and butterflies.
Yeah. Unfortunately, it's not.
Or sellers that think that a subject to is fine.
Yeah, that's right. The idea there is it is sad and it is hurting our economy as a whole, and it is simply lack of education. That's what it is. So bringing this stuff to the forefront, unfortunately, this generation, the previous, the next generation don't think that this is sexy, like you were saying.
Yeah.
It's just not.
Boring. You get a mortgage.
That's right.
But you know what? Hey, at some point, it's cool to live in that loft downtown over the bar. But
Yes.
at some point, you're going to get a dog, then you're going to get married, then you're going to have a kid, and you know what? That loft down over the bar downtown isn't as cool.
No, you're right.
And now you got to start planning for the future.
Yes.
And if inflation is kicking your ass and you stopped contributing to your 401k and you're really not saving, well, if you're paying rent, you got zero savings.
Correct.
But at least if you own a house,
You have something.
you have something.
Yeah.
That's right. That's right. And many Americans don't have that.
Yeah.
And not only don't have that, but don't have a plan to put in place to obtain that. They are hoping and trusting in programs like this to think that it's going to save them. When in the long run, it's kind of a, I don't want to say circle jerk, but it is. You're basically robbing Paul to pay the other guy in this case scenario. Well, that was a lot that we just covered in an hour, guys. Is there anything else that you guys want to add to this this discussion that we can close off with?
Work with a professional.
Absolutely.
Please, that's all I ask.
Yeah.
Doesn't have to be. Personally, I always tell people don't work with family. That's my big thing.
That's a good point.
I have learned that lesson the hard way.
Same here.
Don't work with family as much as you want to, but work with a professional, please. And talk to a lot of them. Don't just pick the first Joe Blow off the side of the road that you meet.
So let me ask you this to close us out. When you say, and both of you said the same thing, what are some things that home buyers, home sellers, seekers of financing should be looking for when they are vetting experts or people that are claiming they are experts at least? What are some things that they should be looking for or looking to?
nmlsconsumeraccess.org.
There you go.
I mean, and I put this out there. It's a website that all licensed loan officers are in,
Mm-hmm.
and it'll tell you their past employment history.
Mm-hmm.
And and I
Go for
love
it.
new people
Go
getting
for
into
it.
the business.
Yep.
Love it. But if you're putting yourself out there as an expert, and 6 months ago you were
Waiting tables.
Yeah.
tables or a DoorDash driver,
Right.
it's hard to say that you're an expert on FHA financing
That's
and
right.
helping first-time buyers because you may not have been doing it. So look at their Facebook page.
That's a good idea.
And Google. I mean, look at their social media. And I don't want to knock anybody, but again, if all your pictures are not housing related, or I don't know, I just think you should pick who you want to do business with, but just make sure that they're vetted, that they've been doing it
Exactly.
for a while. This is a profession, not a side hustle.
That's right. That's right.
That would be my.
How about
Profession-
references?
Yeah.
How about
I give people,
referrals.
clients, my past clients' numbers all the time.
Mhm.
And most of my clients are really good about answering the phone and telling them, XYZ and reviews.
Yeah.
I am
Yeah,
really big on
testimonials.
reviews. Yeah.
Yep.
Absolutely. And those I think are intended for someone that has gone through the experience to be transparent, good, bad, or indifferent.
Oh, yeah.
And they're all out there. We ask for them. And they should be used for picking and choosing who you want to work with. We're not doing it for our health. We're doing it we can display what others have gone through so that it'll help you determine if you want to work with us or not, So that being the case, guys, I mean, is there anything else you want to add to this? That was damn good.
Still just a huge advocate for down payment assistance.
Amen.
And that might be another way if you're vetting out loan officers.
Yes.
Ask them about down payment assistance
Yeah.
products
Absolutely.
because down payment assistance programs they are a dirty word in the mortgage business because you don't make a whole lot of money off of
Hey,
them.
but
Well, because as mortgage people,
Well,
you don't make money on them.
I
But
don't.
Right.
but if you do it for the right reason
Exactly.
and helping people, that's not an issue.
I got into this business
So-
to help people, not to make money.
That's exactly
It's
right.
plus, but
Yeah.
I'll be honest. I got in the business to make money. And it turned out that by
wasn't as
helping
fun.
more people, I make more money.
yeah.
And it turns into something that is not about the money when
Correct.
you're focused on helping more people. Because for us, it's not all right, you apply and we're going to get you into a house right away. There's a lot of folks that we have to advise. We've
Yeah.
got to help put their
Spend
income
the
part
time.
together.
Exactly.
Absolutely. And that is pretty gratifying when somebody that has been denied at two different places comes to you and
And can finally get to a place to do it. Yeah.
Yes. Yeah. And the last person didn't sit me down and talk to me about these things.
Yeah.
They didn't show me
How to
the-
fix my credit
There
or
you
how
go.
what to pay off to get my credit score to even jump 10 points to get me there.
That's right.
Because I mean, it could be something as simple as 10-point credit jump that
That's
gets
exactly
you
right.
into a house.
Well, I want to thank you both for joining me for this discussion. For those of you out there, I'm going to do another plug one more time because it calls for that. This idea of affordable housing has a lot to do with access, understanding, education. And for those of you that are currently renting and curious what is available out there for you, and it doesn't matter what state you're in, visit reviewmymortgage.com. And it is the largest index of mortgage programs in the nation. They are viable programs, down payment assistance, MCC can be added. You can damn near put your loan together, print it out, take it to your loan officer and say, hey, here's what I'd like to do. Tell me why or why not I can or cannot do this program. Great tool for those, unbiased. But there's a lot of nuance to what we do. There's a lot of nuance to what is being proposed. And all I ask you as the listener, you as the consumer, is to do your research. Stop taking the headlines at face value, dig into it, and ask the question, why and how, or the questions, why and how. Again, I want to thank you both for joining. This was not an easy discussion, one that most people tend to shy away from because it's political. Nobody wants to get political. And then
Love it.
for us, it's not about politics.
No.
It's about helping people.
Right.
And I think
doing what's right.
that's right. And I believe if you can do that, truly vet out what these programs mean. We've seen on both sides, they both have some dumb shit in them. They really do.
Right.
Yes.
But some are more logical than others. And some have not been toted around for the last 3.5 years, et cetera, et cetera. But I'm hoping you guys are getting something out of these discussions. We are now above 10,000 subscribers, so somebody's listening to
huge.
this.
Congratulations.
Yes, thank you. And hopefully you guys continue. So that being the case, if you like or if you've got something out of this, please make sure to like, subscribe, and share. Hit that little bell for notifications for additional episodes. We are going to continue coming at you every Wednesday with new discussions with new experts with some good topics. These are only getting better. So until the next one, we will catch you later.
Adios.
Are you tired of feeling overwhelmed and underinformed during the mortgage process? Look no further than ReviewMyMortgage.com. With our revolutionary Loan Smart tool, you can self-diagnose your particular criteria and access thousands of mortgage programs to educate yourself. Whether you're a first-time buyer, repeat buyer, or an investor, our website offers a wealth of information to help you make informed decisions. So don't go about buying, selling, or refinancing a home alone. Educate yourself at ReviewMyMortgage.com, the largest index of mortgage programs nationally, an educational website built for the next generation of future homeowners, just like you.